We're going to talk now to the co-founder of Tikehau Capital, which has about $40 billion under management. And he still sees bubbles in this market amid all of this volatility. And preparing for that volatility, his firm has also bought in a record amount of net new money as it bets on dislocations. We're going to talk to Mathieu Chabran. Mathieu, thank you for joining us. When you look at the market now, are you thinking that some of these credit spreads might blow out a little more and make it much more difficult here to keep this recovery going?
Well, thanks, Shonali. I think, look tonight, Treasury is at 2%, market is down 2%. So I think we're going to go back to what should be the paradigm. It's no longer about the asset price, which is what the marginal buyer is prepared to pay. It's going to be the asset value, which is the future cash flow discounted at a risk-free rate plus a risk premium. And so we see that when those risk-free rates move, obviously asset price, readjust. So we might be, at the beginning of what I believe, is certainly not a crash. I'm not hoping for, the 1% that we discussed this afternoon, hike. I think it's actually maybe long overdue, but it will be very sane for financial markets.
How aggressive then do you get in remodeling and repricing right now then?
Well, I think, rather than remodeling, as Shonali, mentioned, it's been about, people used to say cash is trash. Actually, cash could remain, could become again, king, and you can effectively take advantage. It's not about being an opportunistic investor. It's not about being a distressed player. It's about making sure that you can rationalize the assets you're investing in. And for the past, few years, maybe post-pandemic, COVID and very complacent monetary policy, we had lost sight a little bit of that.
How do you then evaluate properly when the Fed is maybe distorting a discount rate because they're net buyers at one point of even investment grade and high yield bonds? Now that they're pulling out, are you able to more rationally sort of price these instruments and see them at fair value?
Well, I'll tell you, I think it's good that we're removing the very visible end of the market, because that's what the Fed and the central banks were, since March 20. They were telling you they might be or they would be buying some assets, and without any supply-demand adjustments, spreads were tightening, pricing were rallying. And so I think it's good that we can come back into a more normalized environment.
I'm wondering, Mathieu, when you look around your peers and your rivals right now, where do you think they're going to get into trouble in this market?
Well, I mean, when interest rates rise, obviously all levered assets, all, assets that have been enjoying maybe a bit too much leverage to make up for the fairly tight returns that you could get in this, environment, obviously there's going to be some challenges, So you can think of, obviously, part of the real estate market, and we saw that today, the real estate market is clearly the one that is suffering most. It can obviously be the buyout market, and there's been, here again, a lot of leverage and a lot of cheap capital that has been put into these strategies. But again, market is efficient and that will create a lot of opportunities.
When you look at the volatility that we've been in and the volatility that a lot of people expect to persist here, how does that affect fundraising, if at all?
So, we focus on private markets, and I think, we're entering the golden age of the private market for this very reason, because you can mitigate this volatility, you can generate and create some yield product that many investors, global investors, are looking for. Institutional, pensions, insurance companies, even private investors, obviously. And so by focusing on this market that will be needed, by the way, to keep fueling the recovery, because what we do in equity, in private credit, in real estate, in real assets, is effectively getting into the real economy. So actually, there is an opportunity here that this volatility will fuel.
We've seen volatility in the SPAC market. Was that a bubble? If so, has that bubble popped?
Well, I think SPAC is a technology, and effectively there's been a lot of comment last year because so much money being raised and all chasing, potentially the same assets. You saw some business combination, as we call it, with some pre-revenues companies and multi-billions, valuation. So leaving all that aside, if you just look at the technology that it provides, it's an alternative to the IPO market, to getting access to the public market. And if effectively we are ensuring, a more volatile environment, I'm sure we will see some very interesting transactions.
It's interesting. Taylor brings up the SPAC question because you are indeed still working on SPACs and deals in the SPAC world as SPACs are hitting a very rough time in this market. So why are you finding opportunities, and are they better abroad than they are in the U.S. for any given reason?
For a supply-demand demand pure basic, Shonali. You know, it's we decided to go to Europe, to Amsterdam. We raised 2 SPACs last year. We just raised our first SPAC in Singapore. We were the only second promoter of SPAC. So it's about, you know, effectively trying to provide some demand where there is less supply.
You mentioned a little earlier that some of these buyout firms and levered companies can get into more trouble. Do you look around now and say, and you know, we talk about this all the time, the levered technology ETFs that we're seeing out there, do you think both retail investors and hedge funds that have relied on this leverage are going to face a bigger washout?
Well, we've seen part of that, and you know, I'm not a passive investor, you know, per se on this levered ETF, but what we saw last year, you know, and probably also in January with the tech sell-off, is that it's effectively driven by those marginal sellers who tend to be retail investors now, and very often, you know, fully levered.
Where do you see, as you look forward in the next few months, the biggest risk on the horizon?
People not, I think, you know, investors not fully pricing this interest rates risk, because we've been, you know, we've been used to having this accommodating policy. And I think that Shonali has me on record saying that the longer the happy hour, the harder the hangover. And that's probably where we're getting into.
So do you think that now there are still many mispriced opportunities in the market, and what are they?
Well, the misprice is when you tend to forget that effectively an asset return has to be based on its cash flow. And all this growth play that we've been enjoying for 10 years, I think is shifting now onto value. And that's this adjustment that we need to focus on.
Mathieu, thank you so much for joining us. That's Mathieu Chabran, co-founder of Tikehau Capital.